Share my screen. Right, so as always, let me know if there's anything you want me to go through. But essentially, we're just going to talk about the Fed, and tomorrow I'll go through a watch list of what we can be looking for the day ahead. Um, so this will be a relatively quick meeting, unless you guys have plenty of uh, assets, instruments that you want me to look at specifically. But it's all about the FOMC. It's expected to pause rate increases tomorrow. This will be for the second time that they've paused over the last three meetings. Um, However, what will be interesting is whether or not it will be a hawkish hold. So by that I mean holding interest rates as they are, but talking about ongoing inflation pressures and needing to keep rates high instead of cutting, keeping them where they are or even a bit higher for a longer period of time. So, what we're going to be concentrating on mostly will be the governor of or the chairman rather, of the Federal Reserve, Jerome Powell, listening to his remarks in the press conference. We'll also get the dot plot revisions, and either one of those or both could have a hawkish tilt to them. And if the Fed are apparently not ready to discard prospects of further rate increases, that could have a negative impact on risk sentiment. Anything to the contrary, however, could be highly bullish. So when we look at, for instance, let me bring up the S&P. When we look at the S&P from a weekly point of view, and let me put it to a right. So when we look at the stock market, it's been trying to break lower, right? So we have had a sort of a break in structure here. Now, if we get a dovish outcome, then this impulse here, for instance, so impulse correction, could well be the makings of a continuation. So impulse correction continuation. Um, Certainly until the November meeting. Okay. Now, what we've had since Friday is a sell-off, correction, and a continuation of that sell-off. Okay. So a dovish outcome, bullish for stocks. A bearish outcome, a hawkish outcome, bearish. I would argue. All right. So as for the dollar, in that case, same scenario. So we've got this impulse correction, prospects of a bullish continuation on a hawkish outcome, regardless of whether they hold. If there's a hawkish rhetoric, then we're looking for further upside in the US dollar, especially when we compare to the dovish outcome of the European Central Bank last week. This Dixie index is heavily weighted to the euro, about 46%. So just bear that in mind. And vice versa on a less than hawkish outcome. So the dollar has remained basically sandwiched between global themes. Um, so it'll be an interesting scenario with regards to the outcome of the Fed. So everything really hinges on this meeting tomorrow, I would say. Um, I mean, the more hawkish of outcomes would be if Fed Chow, if Powell were to emphasize a strong rebound in output over this last couple of quarters, um, and if he downplays prospects of a recession and poor data, um, that could negatively impact the fourth quarter, um, regarding them as a transitory or a temporary pullback, then that would be highly bullish for the dollar, especially if he would say that that the labor market remains far from normal. Then on a dovish scenario, um, if he continues to advocate a cautionary path in terms of tighter policy, so if he looks to if he's giving us a painting that the Fed are being patient when it comes to tightening, perhaps due to the ongoing reduction in credit supply and potential upcoming shocks. Um, if he signals a deceleration in inflation, um, that would be highly bullish for stocks and bearish for the dollar. Um, yeah, the screen is shared. Yeah, I'm not. Yeah, I'm on the dollar chart. Can you see it? Perhaps not. If not, try coming back in, leaving the meeting, coming back in. Okay, so as always, I mean, we don't know what we're going to get until we get it. So it's always worth having an idea of what to expect in terms of the outcome of various scenarios, but trying to trade ahead of it, position ahead of it, so close to the event is treacherous. Um, and then apart from the Fed, I mean, looking at the UK, we've got the consumer price index, PPI as well, producer price index. Um, but I think anything there will quickly be nipped in the bud ahead of the Fed. So first risk, UK business, and then the Fed. So, any questions about today's activity? Any pairs you want me to go through specifically? I'm aware that perhaps not all of you trade just the US. Perhaps you have swing trades that are open. Keep in mind, guys, it might not be wise to have them open around the Fed unless you're already well in profit with a stop a long way away and you don't mind being taken out for a break even or a lesser profit. But bear in mind that stop losses can't be guaranteed in fast moving markets. So, hence why it's not so wise to have positions open during these events where anything could happen. You could have a real shocker of a number or a rate increase from the Fed or maybe even a rate cut. I mean, you never know. So, it's just not wise to have your positions open during these events. You could be down 100 pips, even though your stop loss is only, say, 20 away, and you could blow your account in such a scenario. Yeah, I would do so. I mean, I would just I mean I don't even generally like to trade at all at any point during the day around a Fed day. Unless of course, I mean if it's blatantly obvious and a real benign outcome, but if there's volatility um, and a contradiction within the event that the markets could be building up to um, reacting in some obscure way. But over a benign event, it's all right to if you see something that's glaringly obvious as a setup, a 90 a 9 out of 10 trade setup scenario in terms of high probability. But if it's quite an uncertain outcome and if there's volatility, then I just stay away from it and wait for the dust to settle and fully aware that it might take a few days for it all to be digested. So I prefer to trade in markets that are very clear. I mean, I just have a rule for my timings of trading, but I mean the stocks today, the reversal was very clear, wasn't it? So you're looking for that sort of stuff, and you can have something as clear as that. I mean, so if we go to the um, we can have something as clear as well. It's bottoming out. Let's put this on my uh, trading template. So you can have something as clear as that, and you can have a data event that would just completely ruin it. So that's why I don't really like trading news because anything can happen, anything can come out of it. Okay, guys. So if there's nothing more, then I'll end it here, unless you want me to go through any pairs specifically. Otherwise, I'll be off. I've got to go and run and catch a football game. It's our qualifying game for the semi-finals. Starts in half an hour. Even though my knees could probably do without it, but I've been summoned. But let me know. Soccer. I'm English. Yeah, football. We call it football in England. Anyone interested in the rugby? That's at the moment. Champions League. Yeah, excellent stuff. Yeah, we've got the Rugby World Cup going on as well at the moment. England doing all right there. Where are you based? Are you based in America, or you call it soccer or football? Okay, I'll do my best. Oh, Botswana. Okay, excellent. I don't know why you can't see the screen. Our man from Botswana said he couldn't see it either. Don't understand it. We are upgrading yet again, so maybe that will resolve it. We've had a significant improvement since the prior upgrades, but it seems to be reverting back to old bad habits, which is highly annoying. But rest assured, I mean, these meetings are recorded and I'm going to post it as soon as we've hung up the call. But I mean, you haven't missed anything. If you want me to go through a pair, let me know and I will. We've just talked about the Fed and the potential outcomes of essentially what we're waiting for is Powell's press conference. And also we'll be looking at the dot plot. And if there's any downgradings to economic forecast, expectations of the terminal rate and so forth, if there's um, a divergence from the prior, then that will be interesting. But we can go through some of that in the morning. But I'd anticipate now markets to be quiet ahead of the Fed. We do have UK data, red news out of the UK CPI ahead of the Bank of England later on this week. I think, I can't remember. Yeah, Bank of England. Yeah, of course it is on Thursday. All right, Helen. Thank you very much. Right, guys. Right, we'll all notice this. You can't seem to see. Yeah, I'll try resharing it. How do I do that? Stop streaming. Does that do it? Right. Share screen. Window. Screen. shared. Right, you should be seeing an economic calendar. You see it now, yeah? Okay. All right. I'll remember that for next time. I apologize. Maybe it's at my end then. Okay. All right. Um, so, well, we were just talking about the Fed, really. So there's not much, unless you want me to go through anything on the screens, let me know. On the charts, we've got the Dixie here, that's the US dollar, the main driver of our forecasting and how we get involved in the market. So we've impulsed up, impulse down, prospects of a continuation on a hawkish hold from the Federal Reserve, or prospects of a continuation to the downside in its weekly correction on a dovish hold. Okay, so we've got uh, plenty of weeks. We talked about this prior meetings, right? They've got the W formation, prospects of a downside move in the dollar, but we need a dovish outcome out of the Fed. So, for instance, if the Fed decides to pause but signals that further rate hikes may not be required, and if the dot plot median showed that there are no more hikes for 2023, then that's going to be dovish. Um, if the Fed are signaling that they can afford to be more patient given the accumulation of progress in both inflation and the labor market, then again, that will be dovish. And if Powell mentions, I mean, that could all come out in the statement, and if Powell mentioned that the best course in his meeting is to be patient given the totality of policy tightening, then again, that would be dovish. And that would likely spark this downside continuation in the correction on the weekly chart and the dollar. Yeah, absolutely. Yes. So the oil price is correlated in a number of ways, but the simplest way to look at it is oil being a risky investment. It's highly volatile. It's very geopolitical and so forth. It's a risky investment. If you get a Fed that is looking to hold and potentially taper off its, well, not taper, cut its rates down the line, and signaling that it's moving towards that era, then that would be bullish for risk assets such as oil, the Canadian dollar that's connected to oil, the Australian dollar, sterling, euro, and the stock market. Right. So that will be interesting. So I mean, you could see yields rise, because the market is essentially banking on the fact that uh, well, bond prices aren't necessary, right? Bonds are not an investment. Investors are going to move into riskier types of investments and potentially out of the dollar. So you'll get rates rising to attract more investment into the US. All right, so that's what we're looking for tomorrow, and that would be nice for instance, the outlook for stocks that we talked about, NAS as well, US 30 to move on up. But if we get a hawkish hold, or even a rate hike, but likely not, more likely a hold, and any hawkish rhetoric. um, so, for instance, if the Fed were to pause its interest rate hiking for now, but said, and it strongly hinted at the possibility of additional rate hikes before the end of the year, that would be highly hawkish and bullish for the dollar. Okay, and negative for oil. All right, guys. So I'm going to leave it there, and tomorrow we will have a meeting uh, in the New York Open, and hopefully we'll find some nice setups. But it could be quite a volatile day, and I wouldn't be wise holding anything around the Fed. Okay, so have a great evening, afternoon, morning, wherever you are in the world, and I'll see you tomorrow.